Crompton Greaves. That's the take on this talk by Sharan. But let's also welcome on board Mr. Sunil Subramaniam, who's a market expert, to get a little better idea on how should one navigate the turmoil that we're seeing in the market and the kind of uncertainty that comes almost every day with fresh set of comments coming in from Donald Trump. And Sunil sir, that's exactly my first question to you. Hi, good afternoon and welcome to the show. How does an investor or how do our viewers try and navigate the uncertainty that comes with the comments that we're seeing, and now that we're seeing an extra tariff overhang of 250% on pharma, we're also being threatened by extra tariffs on India overall as well. How do our viewers navigate these uncertainties in the market at present?
So first thing, I think as a viewer, you need to decide your own risk profile, right? What's your ability to handle the volatility, which is a given in these times, thanks to Mr. Trump's tweets and the overall uncertainty, right? So if you are a risk-taking investor, you can actually look at this and say that if we are going to be suffering a higher tariff than 25 because of the oil, and let's say it goes to 30, right? And then the second aspect of it is that pharma and all, it goes up very high over a period of time. But the key point here is that a lot of the correction is in the price, a lot. I'm not saying that it's done. There's still more correction. But the reason for the correction is because FIIs have been staying away. So I think what you need to correlate is that FIIs have been staying away from all the external oriented sectors in the economy, thanks to the Trump tariff related uncertainty. So there's been a market price correction in those relative sectors. So pharma, IT, those kind of sectors. So now when you look at it, if you're a risk taker, you have to say that ultimately, when these tariffs happen, it's not like India is defenseless, right? Like I said, we can, first thing is use currency depreciation as a tool to counter some of the tariff. Second is you'll see government also giving a lot of productivity related incentives to improve the productivity in order to compete. Third is we'll hunt for a larger share in other markets like maybe EU, the rest of Asia and all of that. So it's not like today there's a lot of the bad news in the price, but definitely if your risk appetite is not aggressive, you should stay away from the external oriented sectors, right? Then you obviously have to Trump proof your portfolio, and to that extent, right, you look at the domestic side, which is not so affected by the thing. And mind you, domestic fund managers last 3 months have bought 2 lakh crores worth of equities. I think average about 60 to 65,000 per month. So clearly they have been buying a lot of the stuff that the SI was selling. And so the FIIs, what they've been selling, like I said, a passive FII will sell both your domestics as well as your externals because they are selling the index. So, and domestics have been going and buying these domestic sectors. So what's happened is that the domestic oriented sectors haven't fallen as much as the external oriented sector. So already there is an element of safety being built, and that will continue to be so because I don't see domestic fund managers taking a big risk on externals right now. They will also prefer. And so the developing earnings season is a key trigger for the fund managers. So from that point of view, if you're a moderate risk investor and you're then looking to domestic oriented, I would say consumption, banking and financial services are the spaces, and capital goods with a slightly longer attitude is the spaces you should be in. But I would still recommend that you stick with a mutual fund manager rather than try and pick stocks at this point of time, because like I said, domestic funds have been buying the good stocks and their prices are already way up. So to that extent, it's very hard for a retail investor to go and say, okay, within the domestic pack, this stock looks good or that good because the earnings season is still underway. It's not completely done. So I would say choosing multi-cap funds and multi-asset funds, because let's bear in mind the other thing which is on the anvil is a Fed rate cut, because I think that the NFP data which has come out in the US, coupled with the fact that Mr. Trump is putting a lot of pressure to get his people into the Fed Monetary Policy Committee, I would say the odds of a rate cut in the US have gone up. To that extent, that's a positive for equities in the emerging markets, and some amount of FI flows may start to come back. So one has to have a balanced approach here. Obviously, you don't dabble too much into the tariff impacted sectors if you don't have the appetite for the risk. So I think that's the way to look at it. But if you saw from the RBI's policy today, the economy numbers look good, inflation looks good. So overall, the prognosis for the economy is fairly decent. And RBI, despite the Trump uncertainty on the tariffs, hasn't downgraded India's growth rate yet. It's still holding it at 6.5% for the current year. So obviously they have extensive access to data. So the fact that India's exports are only 2% of our GDP, right, means that our external orientation as an economy as a whole is relatively less compared to a lot of our competitors. So I think we should stick with our domestic economy's outlook, and the RBI's rate pause. In fact, it's a good sign. They see that there is no worry in terms of trying to give an extra booster of a rate cut to boost the economy. They seem fairly confident about the economy. So stay confident about the domestic economy and put your portfolio around there if you're of a moderate risk appetite.
All right, so that's the advice coming in for all the investors out there. But time now to slip into a very short break. But before we do that, it's SEBI chairperson who has dismissed the reports of weekly expiry curves, says all their discussions have been shared with the market participants. Let's go across and listen in.
I'm not aware of any such communication. I think, Harsh, you have been running some story. I think it's your own speculative thing. And what we have been saying is quite out in the open. Whenever we do anything with respect to anything, I've said it before that we need some reforms, but what will be the nature of those reforms and how it will be treated? As per our practice, we always discuss with the markets. We always put out consultation papers, as in the past. We have also made changes, as you know, in options trading and futures market, in terms of limits, in terms of structure, and will be and we have also put out the data with regard to that. So, in future also, whenever any such concrete measures that we will envisage, we'll certainly inform the market and will come out in the open for consultations.
Welcome back to Closing Trades right here on ET Now. And yes, it will be the MSCI rejig that will be announced this particular week. But Paytm, which was a strong inclusion candidate, could miss the criteria and be included in the next cycle in November. Rabinder joins in to tell us which are the other stocks to watch out for. Rabinder.
Well, as upcoming MSCI Standard Index rejig is scheduled to be announced on August 8, and as per Nuvama Alternative Desk, Paytm, which had initially qualified for the inclusion during the early part of the review period, is now expected to miss the August rejig cut due to timing around the cutoff period, and which likely pushes Paytm inclusion to November 2025 rejig. And if it is included in the next cycle, then the Paytm could attract an estimated inflow of USD 270 million. And if we talk about stocks that are included in the MSCI index, August 2025 index, and the 4 stocks are expected to be included in the MSCI index, where Sugi alone inflow is expected at USD 285 million, and along with other 3 stocks, total inflow is expected at USD 1029 million. And 2 stocks are likely to be excluded from the MSCI index with total outflow of USD 340 million dollar. And if we talk about small cap index MSCI rejig, then the small cap index could see 12 inclusion and 4 exit from the August 2025 rejig, and the likely inclusion CSB Bank along with 11 other stocks. CSB Bank total inflow is expected at USD 4 million, and total for all 12 stocks are expected at USD 65 million. And lastly, if we talk about stock to be excluded from the MSCI small cap index, then the Bharat Dynamic along with 3 other stocks are expected to be excluded from the MSCI small cap index, and the BDL along with outflow is expected at USD 29 million dollar, and the total outflow for the all 4 are expected at USD 36 million dollar.
Okay, Rabinder, thanks for taking us through all of those details. Of course, all eyes are going to be on August 26-27 when this announcement and the rejig it actually comes into effect. But Srikanth, my colleague Rabinder was just highlighting one stock that may or may not make it to the MSCI index this time around based on the criteria, and that's Paytm. Now, if you take a look at Paytm only on the charts, the kind of run up that Paytm has seen in the last 6 months itself, it's up higher by 30%. Year to date also, it's been quite steady. What's your take on the charts for Paytm, and given the kind of up move we've seen, is there any more headroom to grow?
Yeah, if we go through with its technical pattern, then the stock is showing lot of strength. It is right now into some corrective pattern, but broadly the way the stock moved from the levels of 840 to almost 1120, 1130. One thing is very clear that the stock is into strong uptrend, and whenever there is a correction in the stock or in the market, we should look for adding this stock with a positional view. I think the stock has already corrected from the highs, and currently even at this level 1050, 1060, it looks very strong candidate to buy for. I am of the view that the stock is heading for the levels of at least 1400, 1450, which will take some time. I mean to say few weeks or few months, but eventually the stock is heading for 1400 sort of level. So definitely it's a buy at current levels and more on dips.
Coming in on Paytm, let's watch out for that. A very strong move of late is what we have seen in this particular stock. But Sunil, what's your overall take on the paint sector rather? Because of late, it's Asian Paints, interestingly, that has been moving higher. And today, of course, we were talking about talking with the management of Berger Paints, and they are quite optimistic about the demand outlook going ahead. Do you believe that after so much of news flow regarding the competition increasing in, once again to look out for those traditional players in the paint sector?
I think the correction was a bit overdone because they're all good quality companies. I think only thing is that with the monsoon going on, generally construction activity slows down during the monsoon. So in the immediate quarters numbers in terms of the houses and all, right, that's where the painting demand comes from. So I think that could be see a quarter of slowing down, but later as we see now private capex picking up, then there's a lot of industrial paints which get used in it, and I think that it's a good time to enter the paints stocks because as you said, the run up has started now, and as the outlook for I would say rate sensitive itself should improve. I know today the lack of a rate cut has impacted them overall, real estate and other rate sensitive. But I would still retain a positive outlook on that, and hence paints which are in a way, if you look at it, a part of the building materials, part of the high-end retail, so they fit into multiple sectoral fits. So I would say yes, that, and they are fairly domestic oriented. And one of the key things from an EPS growth for them is the softening in crude prices, because crude related derivatives are a key raw material for the paints industry. So that's another positive signal from a margins perspective.
Okay, so that's the take on paints. But Sunil sir, what are you making about the entire big box retail group of stocks? Like you have DMart, Trent numbers are expected in fact any minute now, and DMart in terms of the store edition commentary was strong, and Trent we're not expecting too much of positivity right now for at least the quarter gone by. What's your reading on how the big box retail stores are faring against the heightened competition that we're seeing from modern trade and quick commerce?
I think everybody should benefit from this, given that we are in a festival season now. I think that the level of advertising and marketing that all of these firms will do. So definitely, I would say that there will be a lot of pressure. And as we have been saying, right, that in the consumer discretionary space, right, the lending hasn't yet picked up, despite the giveaways by the government through the fiscal policy in the budget, as well as the RBI rate cut. But that transmission, right, I think with the CRR cut also coming in, there should be adequate liquidity there. I see that interest rates will definitely soften at the marketplace. And so all of the retail sector, the consumption sector, I would say would benefit. And so the increased competition will only lead to an expansion of the market. And I think that with a good monsoon, the rural side of consumption demand should be holding strong. We are already seeing that in the two-wheeler demand picking up. So overall, I retain very positive on the overall consumption space. And I would say right across, right from high-end retail through consumer durables to auto and to realty, I would say that this is a good space, and all of these players, right, I think all of them will benefit from the increased interest during a festive season, plus the rate cuts, plus transmission happening. So I think it's a good time that we are entering into for this space.
That's the take on retail. Let's throw some light on earnings on the Nifty pack that we're expecting. Of course, Hero Moto and Trent will be out today, but tomorrow one Nifty company will be coming out with its earnings, and that's Titan. Now remember, when the company came out with its quarter one update about a month or so ago, it was a mixed set of update, not too bad, but nothing that stood out particularly for us other than the other segments than jewelry like eye care and watches that are expected to do well this time around. So if you take a look at the standalone year-on-year numbers that we're expecting. It's a decent quarter that we're expecting for Titan, wherein revenue is seen at 13,964 crores, which is up 16% year on year. EBITDA also we're expecting a growth of 22%. Net profit we're expecting it to go up by a healthy 20% at 925 crores compared to 770 crores. And in fact, very surprisingly, this time around, based on our estimates at ETNOW, we're expecting the margins to also inch up higher slightly. In terms of their updates given, they're saying that jewelry has managed to grow 18%, so that ex-bullion number, based on the kind of upswing that we've seen in gold prices recently, that is going to be important to watch out for. Watches have grown 23%, eye care according to their update is up 12%, and emerging business up 36%, with strong growth coming in on the international business up 49%. Shrikant, any reading of Titan on the charts, and what is the stock price telling you at present?
Yeah, for Titan also, we are of the view that it is currently into pullback mode. We saw a deep sell-off in the stock some few days back when the company has announced its quarterly update. But if we consider its technical pattern, then it is indicating us that it is into pullback, and max we can see the levels of 3,500 on the high side. So we need to be a little bit careful if there is any upward activity in the near term. I think at higher levels, we can again see profit taking or liquidation of long positions. It is better if we try to buy this stock somewhere close to 3,300 or 3,200 sort of levels, instead of buying at current levels, or in case if there is any bounce back.
Yes, post-market, we will also have the numbers trickling in for Hero MotoCorp as well. This time, the margins is expected to be steady. Well, all eyes will be on the management commentary with respect to their EV performance specifically, because of late, it was the EV that was really an exciting point where the company has managed to claw into that, or rather get into that double-digit market share for itself. Sharan, just wanted to have a quick chart check by you. How do you see Hero MotoCorp on the charts?
Shishti, on the charts, it's looking very good. It had given a breakout of on 4th August of around 4450 odd levels. Now it is retesting that levels. And I think looking at the numbers month on month, Y on Y, their sales have been pretty good. So you can expect a decent set of results. Again, on the charts, it's looking very good. And I think you can easily see higher levels around 4600 to even 4700. So the stock has become a buy on dips kind of stock. If at all you get it at around 4400, 4450 kind of levels, do accumulate it. I think the trend has changed from a sideways consolidation to an upside movement. So at all, if it can break that 4550 mark in the next 2-3 trading sessions, you can easily see levels of 4700 and even 4800.
That's the take coming in on Hero MotoCorp. Let's watch out for that. But just a few minutes before we should shop. And today, of course, has been a decent day for the markets, because post the policy as well, we have seen rather positive moves on the banking index specifically, while even Nifty 50 has managed to move up from that day's lowest point for itself. Stocks like Asian Paints, select life insurance counters, they have been doing very well. And Trent, of course, in the past 4 days, if you track the move, the stock is already up more than 6%. BEL, of course, was also one of the other counters that was doing very well, given the fact that DAC has approved like 67,000 crores of new acquisitions to be done for the defense pack, and select PSU banking space stocks were also buzzing. What's not doing well was actually the IT pack that was reeling under pressure. And Sunil, just a quick take on IT before we wind down today's trading session. Clear time to avoid the IT space right now?
I'm not sure. I'm a contra buyer in IT. So I think that a lot of bad news is in the price. And it's both the AI related stuff as well as the US economy related stuff. But I would say that you should expect Indian IT companies to adapt to the new normal and come out. And I would say that I'm seeing that in the mid and small cap IT companies who are adapting faster. The larger ones will take time. But I think a lot of the so-called bad news is in the price today. So I would be a buyer on dips on IT with a medium-term view, of course. In the short term, continue to expect volatility in those prices.
All right. Right, so that's the take coming in on the IT pack. But with this, thank you so much, Sunil, Sharan, as well as Shrikant, for taking the time out and speaking with us this afternoon. But yes, with this, let me hand over to Ashesha, who is standing by to tell us that how did the market pan out in today's trading session. Ashesha.
Well, yes, another tepid